Hey everyone, hope you're having a good day. My name's Andy. My channel is Finding Value. Today we're going to go through and do our daily technical analysis update with commodities. I'm going to go through the dollar, yields, precious metals, and commodities ETFs that I follow. I'll interject my financial opinions as we go through it. And if you need any help with anything, check out finding-value.com. That is where I dive deeper into individual companies, individual sectors of what I'm doing. I share what I'm doing, share the purchases that I'm making. And we still have a coupon code LEAP that is going on. We've got a 7 a.m. question and answer session occurring tomorrow on Saturday, Mountain Time. All right, guys, let's dive in here. Let's see what's going on in the markets. We've got DXY where we start with, and it is heading higher. This still looks good. It looks like a flag pattern where we could break to the upside. That's what it looks like in the short term. And we have broken the downtrend line. So everything looks good to go higher. 2-year yield moving sideways today. Still looks good, in my opinion, to work its way on up. The way I'm evaluating that is not much selling pressure in that box there. And we've got large green candlesticks. So that's probably a continuation pattern of some sort. We've got the 10-year yield down a little bit today, but it does look like it's trying to run to the upside. And then the 30-year yield also working its way on up. In a little bit of a pullback today, right at resistance, is where we are pausing at the moment. TYX TNX ratio still looks pretty weak and inverted. We could invert further with yields going on up, but we're staying down inverted at this time, looking at the 30-year versus the 10-year. This has generally been a good location to pick up precious metals in. Bond prices continuing, up a little bit today, but this does not look like a reversal yet. Momentum is still to the downside for bond prices. And it's looking pretty ugly at this moment on the monthly candlesticks. 2-year, 10-year, highly inverted. We inverted again today, but for the most part, we've just been grinding sideways, inverted for the 2 and 10. We've got gold up a little bit, $9 an ounce. This still looks good at the moment. Now, it's good on the medium term. So when you look at this, this still looks good on the medium term. It looks like it wants to go higher. We have a little wick at the bottom for a weekly candlestick. But if you dive into the dailies, the bounce isn't that convincing. To me, it looks like we could still go in either direction. But the momentum, if the force is still being applied to the downside, this could be more of a flag pattern. It's not a clear flag pattern, though. So I'm going to remain open. Sometimes you get these weird consolidation things. But a lot of the times what I see is I'll see a big selling pressure move and then a failure to really gain any traction after it. And that generally works its way lower in the short term. And that would make sense if yields are continuing higher, that gold could come under pressure for a little bit. Silver down a little bit. Again, we've got that big selling pressure candlestick, not much of a bounce. That generally works its way either sideways or lower in the short term. Platinum up a little bit today. It does look like it's trying to put in some sort of bottom or something. We're at a very cheap location for platinum down here. It's a pretty good price. And we are underneath the cost curves. It looks good from that perspective. Palladium getting a little bit more selling pressure today. We could be coming back towards the $900 support area and retest that again. XE to gold ratio, we're up with gold and silver mining companies outperforming gold, and gold was up a little bit today. That does look good for a potential move higher for gold and silver mining companies over time. It doesn't mean it will happen immediately. And I think people confuse that. Just because you have a cheap ratio and you break a downtrend, it doesn't mean that it moves immediately. Patience is still required. You might get a lot more time to buy your favorite stocks, or maybe not. We don't know that for a fact. But as this comes back up, which I think it will do over time, gold and silver mining companies will outperform gold when it does that. CRB index down slightly today. We've been just moving sideways here for the most part, up against resistance. And we'll see if we can break that. We could see a little bit of selling pressure or sideways action still left in the CRB in the short term. We do have a bearish engulfing weekly candlestick and on the daily. CRB to S&P 500 pulling back a little bit. And we're still at incredibly cheap valuations for commodities. Keep in mind, the people running stuff do not want commodities to go up against financial assets. They don't want the money to rotate, because if it rotates, people are going to struggle because commodity prices are going to go up, consumer price index will go up, and if a bunch of money moves, they could go up quite substantially. They don't want it to move, so whatever they can do to prevent that movement or delay it, we might see that until they can't delay it and stop it. GDX up against resistance. There we are, right up against resistance there. GDXJ is already broken out. It doesn't look too bad. It's hanging in there quite well. A couple of bullish engulfings going on. And SILJ also looking pretty good. A couple of bullish engulfings broken out, etc., etc. And we got a nice big bullish candlestick projecting higher movements on the weekly candlestick this week. It looks good. Crude oil slightly higher today. We'll see how sustaining this move is in the short term. We could head lower in the short term as a possibility. Not stating that is my that I'm betting anything on it. I'm just stating that this could be a continuation pattern to the downside. TTF, a little bit of selling pressure today, right up against resistance support underneath us. We've got natural gas. This might be the contracts rolling over, so it's difficult to say what natural gas did today. It says it's up 17%. I don't believe that. XOP, yeah, you know me, slightly higher, up about 0.08%. We're above the neckline. Everything looks good, and we still could get a return move back here if crude oil does pull back. OIH also kind of weak today, just a sideways day. We came into this lower, and it could be a continuation pattern. It is still possible. In the short term, again, guys, I don't trade the short term here. We do have a bullish engulfing patterns right there. That generally is upward pressure. So we have previous downside momentum working with new upside pressure in the short term, and we'll see which direction this actually favors here in the next month, or I should say next week. Sprott Physical Uranium Trust up 2.66. We are underneath this resistance line and area. Could be a retest, and we could see some selling pressure. Does that mean it will 100% come and go down? That's not the case, guys. We're working with percentages and probabilities, and in the short term, what I've found is your probabilities are less in the short term versus a big long-term pattern. So I would still say that is in play to the downside until I see something change here. URA up 1.13%, just working sideways. It doesn't look too bad. Your buy points were definitely down here, but it's still working its way on up. URNM also right up against resistance supports underneath us. Resistance is straight above us, and that blue line going across is the previous peak at its highs. We've got URNJ putting in a bullish candlestick today. That does look like it wants to go up. We are up against support underneath us. So that hopefully we get some follow through next week for URNJ, and maybe the whole sector starts to pull up. But it's one candlestick in one of the junior sectors versus I should say Sprott Physical Uranium Trust still looking a little bit weak. TAN up 2.5%. I think we had a little bit lower yields. It's liking those lower yields. So we're up today there. We've got copper continuing to work its way on up. That looks fantastic. Yeah, it looks good. Now, would I buy it up here? Yeah, most likely not. No. You don't buy something after it's ripped that amount. The buy point was down here or down here. COPX up 3.35%. It's got nice, good momentum. This was a consolidation here, just an ugly looking one. And it's ripping higher. It looks really good on the weekly. Big bullish engulf in there. We'll see if we get momentum. Keep that momentum going. Lithium up 1.42%. Does like a little bit weaker yields. Doesn't look that great though. There's nothing really here that has structure to it in terms of technical analysis patterns. Kind of just working our way around there. REMX is very similar. We do have a bullish engulfing, a couple of them here that does signal that we could go higher. We're probably going to have to see yields drop sustainfully. Another thing I don't like about this in this setup here, let me delete this here. This could be a continuation pattern lower where we came up like this. This was kind of like a false move there. And then I would draw another one where it squeezed up and broke to the downside. This still looks pretty weak. Doesn't look that strong. And we still have a lot of selling pressure in this thing showing up. Means the sellers are not done yet. The S&P 500 up today. We got the plunge protection team. They're trying to drive this thing higher. I'm not convinced, guys. You come up into a rising wedge, right into a bearish engulfing, sell off. This is what looks like to me like a flag pattern or some sort of whatever it is pattern that looks like we're going to break to the downside again. Not all that convinced that this is going to rip it. NASDAQ, yeah, we were up 2% today. We've got the rising wedge into a barrage of bearish engulfings everywhere up here. And then we had a nice steep fall. And then I think that the plunge protection team is trying to keep this from plunging, but it's probably a flag pattern. We could head lower. That's my current take at this time. KRE, this doesn't look as bad because we've got all these big fat green candlesticks showing up, not much red selling pressure. I still think this could go higher. And we're up against resistance for the regional bank ETF. And this does look like a double bottom, and this could be your kind of your retest like squeeze before heading higher. That's what I see there. Emerging markets looks like we're getting some good buying pressure today, up 1.15%, and that does look eventually to work our way up if the dollar were to fall. But the dollar's been pretty stable and strong. So I don't know if we're going to get that in the short term here. XHB also working up a little bit lower yields on the 10-year, but again, not convinced yet. We got to punch through here for me to get convinced. So we do have no, it's not a bearish, it's not a bullish engulfing. We do have support down here. I think we could still drop potentially, and that's with yields going up. Because if yields are going up, this is a pretty strong headwind for home builders and affordability of homes. Moo, again, this still looks weak. We drop like a rock, drop it like a rock. No, this still looks like we could drop again in the short term. That this is a continuation pattern that is facing upward. We've got iron ore right up against resistance. You can barely see it. And this does look like a bottoming pattern here. Came on down, coming on up. Maybe we do it. Maybe we do a double bottom. That's also possible too. Nickel down 0.3%, but this still looks good. This looks ready to rip and work its way on up slowly or fast. Either way, I don't know how fast it's going to go up, but it looks like it's bottomed. Aluminum down a little bit. This still looks a little bit weak in my opinion, and we could see a little bit of a pullback in aluminum. It's the two bearish candlesticks and the inability for this to really accelerate to the upside. That is where I'm gaining my opinion there. Baltic Dry Index up against support still looks good in my opinion to try to work its way on up. We've got Newcastle Coal up 1.3% today. We've broken the downtrend. I am bullish on it and favoring the upside at this time. Bitcoin continues to work its way sideways. I don't know, guys. This does not look that strong. There's not usually, if you're going to move on up, you have big green candlesticks. You get this big move, then you get some little bit of selling pressure consolidation. It would have been here that we broke, but we didn't break up. We broke down. Now this is a big consolidation kind of working its way on up, but it's not really moving all that much. No large green candlesticks. You get some big selling pressure. This has the likelihood to pull on back. Ethereum's got that same type of pattern. There's not tons of green candlesticks in there. I'll change my mind if I start seeing them, but they're not here yet. And right now, we still have the downside pressure being applied from this breakout. SMCI up 8.9%, kind of a weird looking chart now. But again, lots of bearish candlesticks all over here. We've fallen, and it's taking us more time and force and effort to move the same amount that it did in 1 day lower. So every time I see that, I have a bearish inclination that this is going to continue lower all the time. Doesn't mean it can't come back up here, but that's where I see there. NVIDIA, I know that was up a lot today, 6%, with a barrage of selling pressure all over the place of bearish engulfings everywhere. The plunge protection team, PPT, out in full force these 2 days, rocking it higher, trying to hold this thing up. Got to get Joe Biden elected. Look at that. Even has U.S. Homeland Security names, AI Safety Security Advisor Board. It's all right there, guys. But that's what I've got for today. Thumb up for the content. Subscribe to the channel. Subscribe to the website if you'd like. LEAP coupon code is still active. We've got a question and answer session coming up tomorrow. I'll probably go over, been thinking, I'm going to continue to go over strategy and what I look for in my approach. I think that's highly important. And then maybe some of the technical analysis patterns, kind of the whole gamut of how I look and approach things. And so maybe still go over some mistakes that I made historically and kind of what I've learned. I think I'll continue to do that with entry points and maybe volatility in the short term and stuff. But that's what I've got for today, guys. We'll catch you next time. This is Finding Value.